Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been America's foremost precious metals brokerage firm since 1972, helping you build a strategic precious metals portfolio. Call 800-525-9556 to buy gold, silver, platinum, or palladium today, or go to McIlvaney.com.
Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets, the news that moves the markets. And this is going to be our final show for 2021, rounding out the holiday season. I'd like to thank Robert, who carried the torch for us last week as I was on vacation, but the turnabout is fair play. Now, the difference here is I don't like sitting in here alone, so I scoured the office for the one guy who wasn't on vacation this week, and I found our fan favorite, Rob. So welcome back in this week, Rob. Thank you for joining me. To end 2021, I think the second weirdest year of my life, back-to-back weirdest years of my short 40 years on this earth, and I think it's a great thing to have a little bit of sage wisdom join us to close the year out. So, Rob, thanks for coming.
You bet. Thanks for having me, Miles. Good to be here.
So we do want to start out and take a quick glance at some charts. End of the year price movements as expected. Not a ton happening post-holiday or in between the two holidays, Christmas and New Year's. So we will eyeball a couple charts here in the next week. Once we know what the final year-end numbers are, we'll get to dig a little bit more into the precious metals charts in relation to that. But then Rob and I want to extend a conversation we were having earlier today, talking a little bit more about gold in general, gold compared to money supply, which has been a running theme this year of your visits into the studio with us, and go from there. So let's quickly dive into the charts here. Gold on our little 2 higher highs and now 3 higher lows, coming off of the bottom we put in back in third quarter, end of second quarter, beginning of third quarter this year, down at our last touch down to about 1680. And gold sitting a little over 1800 right now, building out, again, this long-term wedge pattern, which tends to be a pause. According to Elliott wave theory, you tend to see this type of pattern as a pause amidst a larger trend. In this case, the rising trend in gold, which began in December of 2015, confirmed about 2018, and then putting in that all-time high here in 2020 last year. So that wedge, I want to talk a lot more about it next week, but that wedge is running out of room. I like in this chart as each time we've put in a lower high, having that compressing top of that wedge, it has actually extended out the time frame and raised the ceiling of that chart, and we're starting to move above it. So gold is, despite being in this wedge long-term pattern over the last 12, 18 months, gold is actually looking long-term very bullish. And I do want to encourage our clients to continue to look at the gold chart for the main reasons you own gold, which is why Rob's here to talk about today.
Well, one of the revelations that I had early on is that people don't just buy gold to make money. They're buying gold because they're losing faith in the system, and that's very apparent now.
Right, and I think that's what led us into our conversation earlier today. My joke is always, well, that's always been true. Haven't people always put money in gold because they want to own something that is a relatively stable store of value over time and is easy to exchange? And when you live in this type of inflationary system like we've been in certainly since the 1970s, since you started in precious metals, and even longer than that, gold has been the thing that has maintained that purchasing power comparative to the devaluing of the U.S. currency. And that's what brought this M2 money supply discussion that we've been having all year long, every time you come in here, just how fascinating it is that gold does exactly what it's supposed to do.
It does. And there's 2 things about that chart that really stand out to me. One is that gold will always revert back to the money supply. Always. For the last 50 years, whether it's a period of rapid price increase where people are chasing price, not necessarily a panic, but it's a super strong market overvalue, or times when gold is very soft and you can see the line falling below M2, it always reverts back to M2.
Right.
And the second thing about that chart is, guess what M2 always does?
It always goes a direction.
Yeah, it always goes up.
Always goes up.
And it's not going to reverse. So we know what's going to happen with the price of gold because we know what's going to happen with the money supply.
So you don't think they're going to decrease spending? That's complete news to me. I mean, again, I'm 40 years old. I don't think I've ever known an era where they decreased spending. Maybe a piece during the Clinton era, late 90s.
Well, part of MMT's basis is to inflate their way to prosperity.
Right. Well, and the frustration with like Keynesian economic policy is you're supposed to go both ways.
Right.
We never have.
Right.
We love one side of Keynesian economics, and we've completely forgotten the other side.
But that's okay. Now we have MMT.
But now we have MMT, where you just ignore that whole other half of Keynesian economics.
Right.
So yeah, exactly. You inflate your way to prosperity over time. And for me, that's the Fed gaslighting. You know,
Yes.
That's the part that bothers me the most about all this. I think you guys who have been here a little bit longer than I have, you had a running joke, if I'm not mistaken, where Volcker, whatever he said, you knew the opposite was going to happen. And with Greenspan, whatever he said, exactly what he said was going to happen. So that was the interesting thing about those two guys, is you could almost set your clock to it. Well, nowadays, it's just straight gaslighting, in my opinion. A couple weeks ago, we went through the Fed announcements because it was the last announcement of the year. And what did we hear? We're definitely going to be hawkish eventually, but until we are, we're dovish. And by the way, we've got some of the worst seasonal unemployment numbers in history in 2021, and the income problems and inflation rates going up all across the board. Not just in consumer goods, but in durables and everything else. But everything's fine and we're totally going to be hawkish next year. No, you're not. I would be shocked if they raised interest rates next year.
How can they? They're approaching $30 trillion in national debt. They can't afford to pay the interest on that debt if they raise rates.
No. And so what's going to happen? There's our M2 money supply compared to gold chart. That first point you brought up, the fact that gold always reverts back to that as a mean. What's interesting is look at the periods of time where it spends more time above the line than not. And think about what was taking place during those years, stock market crashes, real estate issues. This is the emotional panic that happens after you've lost a portion or maybe a significant portion of your money in an investment that was overpriced at the time based on the wrong metrics, not off fundamentals, not off real trading, but just based on speculation. You have a correction in that market, and then you get a big move into things that are alternatives, protective alternatives, like you said at the very beginning, the real reason people own gold. So you spend time above that line, and then you have periods where it flips, and you'll spend years below that line when you should be looking at things like more speculative investments because they're cheap. So for me, one of the great things about the M2 money supply compared to gold chart is it's a constant reminder that everything is cyclical and markets go up and markets come back down, and you can't chase that speculative return no matter how much your neighbor says he just made in whatever market he just made it in.
And that's very true. It's very true in our market as well. And there are times when people are chasing the gold price and the silver price. This is not that time. People are not chasing price right now. In fact, if anything, they're frustrated by gold's lack of performance, and I understand that. But the fact that gold was down this year hasn't stopped anybody from buying. Our business has been very busy. Not the busiest I've ever seen, but it is a very focused and driven allocation to gold. People are adding significant percentages of their overall portfolios to gold and silver right now, and they're very focused about it. It is not a panic. They're not chasing the price. They're not chasing the market. They're not afraid of anything. They know what's coming.
Yeah, and I'd agree with you. I don't think we've seen the quote-unquote gold fever yet.
Right.
We
That's
haven't
the term
seen
I'm
that
looking for.
2009, 2011 gold fever. What we've seen is what I would argue pretty prudent value investors. And what's funny, and we were talking about this earlier, and I think what's been great is the number of people in the YouTube sphere and the number of people in the millennial generation, whether they were participants in the speculative phase of the cryptocurrency market or not. One thing I'm hearing a lot of and fascinated to see is the number of people in their 20s, in their early 30s, who are looking at precious metals and saying, to me, gold looks like what Bitcoin is going to be eventually. Gold looks like the thing that Bitcoin was created to be and is currently having its honeymoon phase like a lot of assets do including tulip bulbs a couple hundred years ago. That's a fun story to dig into if you want to out in listener world. But cryptocurrencies are having their honeymoon phase. And then they're going to be the thing that they're supposed to be, which is an open, transparent currency that people can use. And then they're looking at gold and saying, well, cryptocurrencies haven't done that yet. They're still in a speculative phase. I have made my speculative money. Now I need to own the thing that's going to preserve my assets long term. So that's what's been fascinating to me. And it is this younger generation coming up. And one of the things I've seen with this younger generation is I think a lot of them saw when they were in their teens and early 20s what the real estate market did and what the stock market did to their parents back in 2006, 7, 8, 9. And they said, we don't want to participate in that again. And I think that's where that's coming from. So whether you're one of these new kids coming into the precious metals market or you've been working with Rob for the last 30 years, we're starting fresh here next week. What should you be doing if you're a precious metals investor or you're interested in getting in it? What should I do?
3 main questions. How much is it going to cost me? How can I get hurt? What happens when I want to get rid of it? You need to know the basics. You need to deal with people that know what they're talking about. People who aren't trying to sell things, people who are trying to educate and inform and show you where the values are.
Yeah, and I think those are fantastic points with any investment, whether it's precious metals, whether it's crypto, real estate, equities, doesn't matter. So that's a great point. And having someone, me being here going on 16, 17 years now as a mentor to me through the years, as difficult as I know I made that on you. And then obviously anybody out there who is a client listening, definitely touch base with your ICA Precious Metals advisor at the beginning of this year. Help plan out what your financial future looks like going forward and what your precious metals portfolio looks like going forward. It is probably going to be a good year for gold, and we don't want people to miss that. That gold fever we were talking about earlier, don't wait till you're emotionally driven to make that decision. Do it prudently today. And then finally, if you are somebody who's just looking at getting in this for the first time, give us a call. There's nothing wrong with the conversation. We're happy to sit down and talk with you. We'll walk through your portfolio.